Warren Buffett and Charlie Munger are arguably some of the best investors of all time, and they have an enormous amount of their wisdom shared on YouTube and shared in books. And what I'm going to do today is I'm going to go in there and identify some of the most impactful lessons that I have drawn from Charlie Munger and Warren Buffett. And I'm going to show you how you can directly apply this wisdom to get better results when trading. How to help you lower your negative trading emotions, how to help you build consistent profitability, how to help you get funded, how to help you get payouts and all that type of stuff. So without further ado, let's get into this exploration of the mindsets, the perspectives, the wisdom of Warren Buffett and Charlie Munger. Now, Warren Buffett and Charlie Munger have an interesting perspective to how you get what you want from life. And I'm going to share a few YouTube clips here, a few snippets of these YouTube clips, and then I'm going to bring the iPad up and explore this idea. And we're going to use these ideas to discuss how you as a trader, how you as an individual can get what you want from life, from your trading, whether it's funding, or from your life, whether it's a better body, more money, a relationship, whatever it may be that you want. We're going to use the wisdom of Charlie Munger and Warren Buffett to share how you can start building momentum and get what it is you want from life.
But wishing for $1 million instead of some more tangible short step is the wrong frame of mind. That isn't the way we got our $1 million.
No, I would agree with the wishing for a job makes a lot of sense to me, and figuring out how to get one and then going from there. But there is, and always has been, that doesn't mean it always should be, but there is a tremendous amount of inequality. What you don't want is an inequality of opportunity. There will be a lot of inequality in ability. A market system like we have turns out what people want. If they want to watch a heavyweight fight and they want to watch Mike Tyson, they're going to pay him $25 million for getting in the ring for a few minutes. And it produces what people like, and it produces in an abundance, and it's done very well in terms of production. It is much better to be in the bottom 20% in this country now than it was 50 years ago, and it's better to be in the bottom 20% of this country than in any other country.
Okay, so in this clip, both Charlie Munger and Warren Buffett are sharing their perspective that if you want something in life, you have to work for it. And Warren Buffett is saying that there has been, there always will be, and not that it should be, but there is a lot of inequality. But he also goes on to say that in this system that we're in, those who are valued and those who provide value, and if something is wanted and there's demand for it, those individuals that provide that service or provide that value are very handsomely rewarded for that. So this perspective, you can probably see what I'm going to share on this, is that if you want something from life, you have to work for it. And if you want to make money, you have to provide value. You have to put something out there that is of value to other individuals or to society. And that's how you get what you want in life. There's another really great clip here.
The best way to get what you want in life is to deserve what you want. How could it be otherwise? It's not crazy enough so that the world is looking for a lot of undeserving people to reward.
It's a very frank perspective. If you want something from life, you have to deserve it. I think there are a lot of people who are entitled and they think they deserve something that they don't, and they don't work for a certain outcome. They don't put the work in, and they're expecting something unrealistically because of this entitled state, and they get angry at the world, they become victims, they blame other individuals as opposed to taking responsibility for their actions. So using this perspective from Warren and Charlie, how can you go off and get what you want from life? Well, the first thing they said is that there's no point wishing for $1 million. If you want $1 million, you have to break down the certain action steps that go towards, the smaller steps that go towards $1 million. So let's say, for example, you have a certain goal. Instead of just closing your eyes and wishing for that goal and thinking about that goal, although that's important, there are steps that you have to do, smaller action steps that you have to put work into in order to achieve that goal. So instead of wishing and using hopeful thinking that I'm going to be a millionaire trader, what are the specific action steps that lead to that? And if you're a trader, there are specific action steps. If you're just an individual, there are specific action steps. One of the best things you can do, if you want to make $1 million, is get an income producing job, or have a business that produces income, or trade, have a trading strategy that produces income. So you need to have some source of income coming in, and you have to be dedicated to the action steps that generate income. Then you have to be dedicated to the action steps of saving a portion of that income and then investing a portion of that income into income producing assets so you can compound and you can build momentum with your wealth. And then you have to continuously provide more value or trade larger amounts of capital to generate more income and then save more income and then invest more income so you can perpetuate that cycle and build compound interest that way. But in other words, instead of just wishing for a goal, there are certain action steps that go into goals. And instead of being entitled and wishing you had something and blaming other people, blaming other circumstances when you don't have it, it's very important to take responsibility for certain action steps. So if you want to be a consistently profitable trader, what are those action steps? Well, number one, you have to have a proven profitable edge. And there's no point looking or relying on other trading educators and leaving that in the hands of them. You can learn from these educators, you can understand what trading strategy they trade, but you have to take full responsibility for that. You have to do your own testing. You have to do your own data collection to prove that that edge is profitable the way you like to trade it. Then the second action step, these are the action steps that are proven to make you wealth. The second action step is put that proven profitable edge into a mechanical trading plan, a mechanical system, so that you yourself as an individual can consistently execute on that plan. And then after that, the next thing you need to do is you need to master your trading mindset so that you can actually stick to that mechanical plan. Because once you have the mechanical plan, it's both fear and greed that are going to take you away from that. If you're too scared to execute when the market presents an opportunity, you're not going to take the trade. If you're too greedy and you think there's opportunity in the market when there isn't, you're going to overtrade. In both those states, you're not going to be executing on your profitable edge, your mechanical trading plan. And then number four, you have to structure your life in a way that allows you to execute your mechanical trading plan with a balanced state of mind, a state of mind that's out of fear and greed. So it's about structuring action steps 2 and 3 above and consistently executing on that, because consistent profitability comes from the consistent execution of these action steps. Okay, so instead of wishing for a funded account of $100,000, or instead of wishing for an income of $100,000 or $100,000 cash in the bank or $1 million cash in the bank, identify the action steps that lead to that. Identify as a trader, what are the action steps I need to do? If I want to make $10,000 a month, well, I need to be making 10% on $100,000 of capital. Or I need to be making 2.5% on $400,000 of capital. Figure out what the numbers are, run the numbers, find out the action steps, the specific action steps that lead to that, and then focus on consistently executing on the action steps, the process that leads to the outcome. And by putting the work in and doing the action steps, you're going to feel deserving of that outcome over time. And because you've put the work in, because you feel deserving, you're going to have that outcome because you're doing the proven action steps. Okay? So don't wish for a goal. Don't wish for an outcome. Don't play victim. Take responsibility. Identify the specific action steps that lead to an overall goal. Put the work in. Be deserving of that goal because you've put the work in and you'll have the goal.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who...
Okay, diversification is protection against ignorance. That's an interesting perspective. So we can talk about diversification in many different concepts or many different ideas with your trading. The first place we're going to talk about it is when we talk about your particular trading strategy. Now, if we talk about your strategy, I agree with Warren Buffett in what he says around diversification. You want to understand your strategy so well, and you want to have every component of that strategy figured out, and you have certainty that it has an edge, and you're certain it's going to end up profitable, that because of that level of certainty, you don't need to be diversified. You don't need to trade other trading strategies. You can just solely trade the strategy you trade. But then when we talk about funding, there are certain things that are out of your control, certain things like we've seen recently with My Forex Funds, how it went under because of the regulations. There are certain things that are out of control where diversification can play an important role. So when we talk about diversifying your current strategy, it's important not to. And it's important to, at least when you start off and you're mastering your first strategy, to understand, all right, what are the pros of my strategy? How do I get into the market? How do I manage my position? How do I get out of the market? How much do I risk? And you understand each of these components, how you get in, how you get out, how much you risk. And you know that over a large sample space, over 100 trades, for example, you're going to end up profitable. You're going to end up making money. And that's what the data shows, and you've got certainty in that. Okay? So it's important to have that level of clarity and understanding. It's also important to understand the drawbacks and the risks of your trading strategy. What are the risks of the entry, the management, the exit? What are the risks and drawbacks of your risk management system? Understand each of these components so you understand both components of your trading strategy. You understand when the strategy is performing well in certain market conditions, how to capitalize on that. You also understand that, all right, when the strategy isn't performing all that well, this is the shortfalls of the strategy. And then once you know what the drawbacks are, you can put processes and plans in place to manage and mitigate these. Okay? Now, when you have a complete understanding of your strategy like this, then there's no need to be diversified because you know that this strategy is going to help you get the goals you want to get. And then what you focus on is scaling capital. Use prop firms, take advantage of the leverage you have the opportunity to access, and you scale with prop firms. Okay? So this here is where I agree with Warren Buffett. When you talk about your strategy, diversification here is just protection against ignorance. And ignorance is not knowing this. Ignorance is not knowing the drawbacks of your strategy where it doesn't perform. You haven't figured that out. You haven't figured processes and plans to manage that. Maybe you don't even understand fully how to get into and out of the market. But if you understand those components of your strategy, there's no need to diversify because you're prepared, you're planned, you have you know what to do in every scenario, if that makes sense. Okay. Now, where diversification becomes important is when we start to talk about prop firms. And there are certain prop firms out there that are more reputable than others, yes. And but we've also seen very reputable prop firms go under and haven't performed very well. So what's important when we talk about diversification with prop firms is to, when you start to build your prop firm, you start with one prop firm, you pick up one account, and then you maybe go into another prop firm in a different regulatory environment. You pick up another account, and then maybe you go to a third prop firm, and you pick up another account, and you have 3 accounts with 3 different prop firms. Okay, in different regulatory environments, in different countries. So maybe you have 100K here, 100K here, 100K here, and maybe there's an issue with the US-based prop firms. And if that's the case, you only lose 30% of your stack as opposed to if you had all your prop firms in the US, okay? So diversification then becomes important when you talk about prop firms, and then you can start to scale up these prop firms when you have multiple different, money with multiple different prop firms. So you're diversified and you're not vulnerable if one prop firm goes under or there are issues with regulations in that country. The next video is a very interesting one. I remember watching this many, many years ago, and I got goosebumps all over because it's a very interesting story. So this is on gratitude and luck with Warren Buffett and Jay-Z.
Luck. We all know hard work's essential, discipline's essential, staying power is essential, but there's that element there that you can't quantify, but you know it's there. Warren, you've had some thoughts.
Well, there's a lot of luck. I mean, just being born in the United States in 1930, the odds were like 30-1 against me. I mean, I didn't have anything to do with picking the United States as I emerged, and having decent genes for certain things. And in my own case, I was sort of wired for capital allocation. And being wired for capital allocation a couple of 100 years ago in Nebraska wouldn't have been a thing. And even now, being born in various parts of the world, it wouldn't have meant much. But here I was in this soon-to-be very rich capitalistic system, and it just so happened that what I did paid off enormously in a market system like we have. And if I'd had a talent in some other area that was way less commercial, I mean, I would have had a good time doing it, but it wouldn't have paid off like this. But of course, Jay said it perfectly when he talked about, he's in there recording for himself, and the money comes afterwards. I mean, I got to do what I love. I mean, and it doesn't get any luckier than that. If you can spend your lifetime, and I'm 80 now, and doing things you love every single day. I mean, I would be doing what I do now, and I would have done it in the past,
if the payoff had been in seashells or shark's teeth or anything else. If you can go to work every morning, I tap dance to work, and I come down and every day's exciting. So that is lucky. I mean, that didn't have to happen that way.
Mention the story about London.
Yeah. So they did. We were into different things. We were into a lot of street things, and just so happened I had a talent to make music, and a guy by the name of Jazz, who I started out with really early. He got the opportunity. He got to deal with EMI. He had the opportunity to go to London to record his album. And, I went along with him, and we waited for 2 months. Well, in that 2 months, there was a sting operation, and they took, my friend I'm talking about, took him away for 13 years. And the only reason I was in there because I was away, doing this music stuff.
So it's obvious that Warren Buffett and Jay-Z in this circumstance as well recognize the amount of luck that played in their success and the role that luck played. And Warren Buffett said that he's won the genetic lottery, and being in the type of situation he is very, very rare. So he recognizes and has gratitude every day for that component of his success. But on top of that, there's also recognition that the more prepared you are, and you have to take advantage of opportunities in order for that luck to develop as well. There are many people who have many opportunities and are put in golden circumstances that don't take full advantage of the opportunities they're given. So as well as understanding the opportunities you have, even just having access to internet connection, having access to prop firms, having access to education, having access to YouTube is an opportunity in of itself that not everybody gets. So it's important to recognize your luck, be grateful for the opportunities you have, but also capitalize on these opportunities. Don't let them slip, take full advantage of them, and utilize and leverage these opportunities to help you to get what it is you want from life. Now, the next lesson that we learn from Warren Buffett is humility, and how that despite his enormous amount of success, financial success, he doesn't let his ego get involved. And there are a couple videos I'm going to share now where he takes losses with humility, and he takes full responsibility for his losses, which not many traders do.
I should just throw this out there since there's been speculation on it. We've sold. I was 100% responsible for the Paramount decision. I read speculation that one of either Ted or Todd had some involvement in that. No, it was 100% my decision, and we sold it all, and we lost quite a bit of money, and that happens in this business too. Well, we've discussed Dexter many times in the annual report, where I, back in the mid-1990s, I looked at a shoe business in Dexter, Maine, and decided to pay $400 or so million for something that was destined to go to zero in a few years. And I didn't figure that out. And then on top of that, I gave the purchase price in stock, and I guess that stock would be worth, I don't know, maybe 6 or 7 billion now. It makes me feel better when the stock goes down because the stupidity gets reduced.
So we see him take full responsibility for the investments, and we see him not get emotionally invested in those investments, and he knows exactly what to do. He follows his processes, he gets out, he takes responsibility for that, and he moves on. That is a lesson from a great investor, and that a lesson that many traders can implement. And for example, there are certain circumstances that you may feel are out of your control, but continuing to play victim and blame those circumstances isn't going to do anything for you as a trader. I saw recently I had many clients, many students who had lost max allocation with my Forex funds. Some of them took responsibility. They recognized, all right, look, I was vulnerable in this situation because they didn't diversify, and they took that as a lesson. They moved on, they rebuilt their funding, and they went back on to building momentum to achieving their goals. Whereas some traders continued to blame my Forex funds. They exaggerated how bad it was. They ran their story. They didn't take responsibility for their own actions. And as a result, they were stuck in that situation. Because whenever you blame someone else for your circumstance, you strip yourself of all power to overcome that. Because what you're saying is that that's not my responsibility. That's not my thing. I'm a victim of this circumstance. So those individuals that continue to blame and run the story oftentimes keep themselves in a rut, and they never break out of that. The first step is recognizing and taking responsibility for why you're vulnerable in that situation, using that as a lesson to rebuild your processes and move on. This is something that Warren, he took those losses with humility, and as a result, he was able to move on and continue to do what he does best. And the last lesson I would love to share on this video is Charlie and Warren's friendship. And many people talk about how lonely trading can be. And as a result, the power of having a close friend, someone that you can run ideas by, someone you can talk about your journey with, someone that you have there to share the highs and lows with. And this is something that Charlie and Warren had a very special friendship, and it's obvious by these couple clips.
But I don't regard Utah as being unfriendly to the idea of utilities being treated fairly. Charlie? Charlie, I'm so used to I had actually checked myself a couple times already, but I'll slip again.
That's a great honor, Warren. Yeah, Warren, you touched on it initially in your letter.
Hi, my name is Andrew Nickus, and I'm wondering if you had one more day with Charlie, what would you do with him?
Well, it's kind of interesting because, in effect, I did have one more day. I mean, it wasn't a full day or anything, but...
So if you're in this game, I highly suggest you find an accountability partner or someone you can start to build a friendship or relationship with. And what that does is it gives you the opportunity to share your journey with, to bounce ideas from, to have someone to hold you accountable, to have someone to be there to support you when you're at your lows in your journey. I know I've made many friends from this trading journey, lifelong friends, and it's a very special thing to have someone there to support you, understands what you're going through. And I think that's very, very important in this game. Okay, so make sure you implement these lessons from Charlie and from Warren. They are very impactful, and they may seem like small things, but if you implement them into your trading, they're going to have an effect on your ability to be consistently profitable. If you enjoyed this video, make sure you share it with your trading communities, like, comment, subscribe. I also have the Trading Psychology Archetype quiz in the link in the description in the first comment. So if you haven't already done that, make sure you do. That's going to show you which of the 4 trading mindsets you have, as well as give you a personalized plan outlining exactly what you need to do to get consistently profitable. Thank you for watching to the end, and I look forward to seeing you all next video.